Good afternoon, welcome to Money Tips. How you doing all, everyone? It's a new week. A lot of people in the UK are now back at work, back to school, so it feels like a normal kind of September now. And we learned that the first country to adopt Bitcoin as a legal currency is El Salvador. Right, El Salvador will be the first country to adopt Bitcoin alongside the US dollar as a legal tender or legal currency in its country. In other words, you can spend that currency as you can the dollar or the local currency. And each citizen will be given a £30 Bitcoin token when they open up an account. This has been heavily promoted by the 3 million users of Reddit who write and support Bitcoin. And they see this as the new acceptance of Bitcoin as well, we see the first country accepting this as legal tender. I don't know quite how it's going to work with their central bank and currency reserve and all that sort of stuff, but they've obviously thought about this and they'll have to work it out. Maybe they are seeing this as a challenge to the US dollar. I don't know. We shall have to see. I mean, most countries don't even accept Bitcoin as a currency. They just treat Bitcoin as a commodity or as an investment, and it will be taxed accordingly. So if you buy Bitcoin and sell it, then it's taxed, as far as I know, as capital gains tax, as if you were buying and selling a commodity rather than a foreign exchange or a forex currency. But we shall have to see. Other news last week is that Twitter is set to show some acceptance of Bitcoin, and that could boost Bitcoin and the currency further. Their chief executive is a fan of cryptocurrency, and we know that Bitcoin has recovered to $52,000 as of last week. I think it's just over $51,000 today per coin, but it had been as low only months ago as low as $30,000. So it's wildly speculative, isn't it? It's up and down like a yo-yo. It's very volatile, this type of investment. I don't know a currency that almost halves in value and then goes up to near what it was within just a few months. It's a crazy situation. And then I read that a businessman this is something you've all got to watch. It's not necessarily Bitcoin's fault, but he lost £500,000 in the UK in a Bitcoin investment scam. There's a lot of people being approached to get involved with, you see these on emails and posts, to get involved with Bitcoin trading, as a lot of students are getting involved with Bitcoin trading and stock trading to supplement their income. But this businessman, who was a sensible guy, graduate, master's degree in science, ran his own business, was very careful with money, but got sucked into a trading account scam on a very, what I'd call a very credible looking website. I've joined trading websites and they've got to look credible. They've got to be lines all over the place. And he started off with a small £250 investment to open the account. And I've seen a lot of these ads myself. You get, if you click on the link asking for more information, you get a call from someone saying they're an account manager. Can we open an account for you? And you might risk $100 or a couple of $100 to open the account, which is fair enough. But then, I don't know, he got then sucked into more and more amounts, and then he eventually put some of his Bitcoin holding into the trading account, and which I think the trading account was involved with shares and Forex, and he lost money, and they kept saying, we'll put a bit more in, we can make this up. And eventually it amounted to £500,000. It's kind of destroyed this guy. So it's very easy to be sucked into these things. Well, you think it wouldn't be, but it is. And the way it's done is to look very credible and to start off with small amounts. And I was listening to a talk by the London Business School recently that people who lose money on a certain strategy have a propensity to keep that going. They won't admit defeat, so they want to keep that going. And it's a bit like my dad. If he had a bad day on the horses gambling, if he lost in the first race, you think, well, I can make this up on the second race and I can make this up on another. And a lot of gamblers are sucked in like this. They think that they can make up their losses by keep gambling, or if you keep taking another spin of the wheel and double your bet, you can get the money back until your money then runs out. So, and the other thing is that you're more likely to follow an investment or a selling process if you start off with a small amount, like a free gift or a small amount. And that's what happened in his case. He started off with £250 rather of investment. But I'm sure if they said invest £10,000 or £20,000 in this account, he wouldn't have done it. But because they started off small and gradually sucked him in, that's how he lost all of his life savings. So be very careful. The other thing happening in the UK, I've mentioned this last week, is that national insurance or taxes are likely to rise in the UK to pay for the growing social care time bomb. And this is because in the UK, people have to generally sell their properties to pay for social care, towards the end of their life. This is if they're going into a care home. And at the moment, the system's not really working. So the government is looking for ways to put up taxes. One of the taxes we pay here is national insurance. So we pay income tax plus national insurance, and they're planning to put that up. But a lot of people are not happy about that, especially younger people feel, why should we pay for the older people when they've got their houses? Why should we pay for that? But then you might argue, on the other hand, well, the older people have paid for what they've grown up with in this country, their education system, the economy, the government, the rule of law, all had to be paid for by somebody. So there's an argument going on between the younger people who feel that they've got student debt, they haven't got a house, they can't afford a house, so why should we pay for care for people in their 60s and 70s who've got property, have benefited massively from the rise in asset prices in property over the last, on average, property has gone up substantially in the last 4 decades. So anybody who bought a house, say, in the 70s or 80s have done very well. Even though they just sat on one property, they've done very, very well. So a lot of people on the left are saying, well, why should the working people now, who are perhaps less well off than them, pay for their care? So there's a big argument going on, and there's a lot of people on the left saying that we should tax assets, not just tax the rich, but tax people who've got assets, people who've perhaps saved and bought their houses and worked hard all their life to own a property, and this could be taxed in some way if the people on the left side of the argument get their way. Certainly, if there were a Labour government or a Liberal government, we would see that coming in. It was Liberals' policy to start bringing in a wealth tax and start taxing people's assets, including their homes, their jewellery, their goods and chattels, literally to sort of have a one-off tax on these investments. My view is that if people have worked hard and built up their assets, in a way you might say, well, why should they pay tax? Why should the government just put their hand out to get that tax? But other people would argue, well, all of the stuff that we have here has got to be paid for in some way, and the current tax that we pay doesn't cover it all. The current tax we pay doesn't really even cover the running costs of the country. So it's like having a household where your income is short every year and you keep having to borrow money on credit cards to keep going. Well, that's effectively what the country is doing. A few years ago, they had the windfall from the North Sea oil. That's largely gone. It's spent. They had windfalls from selling off state assets or the family silver. That's largely gone. So where is it now? It's taxed. And we've obviously printed a lot of money in the last couple of years. We printed billions or created billions out of thin air. That's all got to be paid for somehow. So I would expect to see rising taxes. I wouldn't expect to see a Conservative government bring in a wealth tax, because that would upset a lot of their voters, obviously. So it looks like it's going to be an increase in other taxes like national insurance. And national insurance is a tax brought in really to pay for the NHS and the pensions and the state systems to look after people after the war, when they brought in the National Health Service and social care and that sort of thing, which was supposed to be a cradle to grave care system. So people of a certain age will remember the government saying, we're bringing in this system to look after you from cradle to grave. So you'll be looked after from birth, in free school, free healthcare, and then free social care at the end of your life. But now that free social care has kind of been taken away, because if you own a property, they take your property to pay for it. Or if you have assets over a certain amount, they take that away to pay for it. People who've got nothing and never saved a penny and live in a council flat don't have to pay a penny, because they haven't got anything to go after for those people. So this state benefit system, some people might say it's largely broken, because there's not enough money to pay for it. All the national insurance that we have paid and all the taxes we've paid since we started working has been spent. So it's not saved anywhere. So that's the real problem, that they're relying on people who are working to pay for the people who are retired. And some of the biggest bills we have are state pensions, social care, NHS. Those are, and yet benefits as well. But it's the people who are working and paying taxes are paying for those benefits. And that equation is changing now. The ratio is changing. So there are more people retired and living longer, and the ratio of people retired to working has changed. So the system is really broken, and that's why the government has to look at it, because the system doesn't add up when you look at it. When it was designed that people would retire at 65 and probably drop dead within a few years, but now people are not. That's not happening. So it was designed with the wrong figures in mind. Well, certainly the wrong figures in today's terms, where people do live longer. So that's the real problem that countries like the UK and in the Western world face, is this time bomb of cost of social care, cost of state pensions, and all those things that look after the elderly, but paid for out of the taxes of us. So in a way, it's a bit of a Ponzi scheme. Ponzi is that the name for someone who, I think Italian, who took people's money in an investment scheme, and instead of investing it and making money for them, he paid the returns out of the money that was coming in, like Bernie Madoff did, right? Well, that is in effect what the government is doing with our money. They just take the money in from the working people and pay it out to the elderly. And then people had the suggestion, well, if we increase immigration, we'll get more working people in to pay for the elderly people now. But then who's going to pay for those people when they come up to retirement? Who's going to pay for their health care and their NHS bills and their schooling? The system is a Ponzi scheme. It doesn't make sense. So I would say the best way out of it, if you're young, is you've got to kind of row your own boat and look at ways that you can create your own wealth, so that you're not going to be faced with these problems when you come to retire. And I can see it from both ends. I can see it from the younger side point of view, and people who are coming up to retirement or maybe in retirement and need care. And of course, families in this country don't really look after their elderly in the same way that they did many years ago. Well, most families don't anyway, so that's why people end up in care homes. So that's another thing that has come up in the last few years with this state healthcare and state system, the national health system. That's another thing that has changed the dynamics of society, and that's why I think we're having financial problems now. So the best way is to try and create your own wealth. I'm running a free training session on how you can become financially free over time without working any harder than you are now. It's free training, so click on the link below, and you could learn how to become financially free so that you don't have to face these dilemmas when you get older. So thanks for listening, and have a great day.